Okay. Apologies for that, guys. As soon as we went live, my computer kind of bugged out, and my browser ended up shutting down. Let me try and get back to where we were. Please remove the media streams from stage. Remove. Okay, there we go. Do you know what? Okay, so the annoying thing is I have made the change from having 4 screens back down to having 1 screen. And I forgot that this may be an issue when I live stream because I'm not going to be able to see the chat. How are we doing, Rob? Hope you're all good. Brian, hi, what are we doing today? So usually I do a Darwin review on a Thursday. The problem is I think I need to get up another screen set up because I'm not going to be able to see everything. Let me repost this session on Twitter because also that's not working. Post this. Okay, let's go. Copying. Oh, I'll worry about that later. Now where have I put StreamYard? Here it is. Oh God, how are we going to do this? I probably should have thought about this beforehand. Yeah, correct. I review other people's Darwins. That's going to be no good. Oh, my love. Oh, no. Perhaps. I wonder if for the purpose of this stream, I can set up one of my other screens again. Yeah, 1,000 Kierans. That's what you got to deal with for the time being. I think maybe for this, I'll just have to do it like this. Let's get. Okay, I'm presuming you guys can see my screen fine and see everything fine, and I can still see the comments. So if I just move, can I make that any smaller? I know what I can do. No, I can't. I don't know if I can. So the chat, because I stream on multiple accounts, the chat's only on StreamYard. I'm not sure if I can access StreamYard on my phone at the same time. I tell you what I will do, actually. I figured it out. So instead of doing that, I'll just share this. And then share that. Yeah, well, how does that look? It's pretty gross, isn't it? Oh, well, I think for today, so for today, I think that's what we're going to have to do. And then in future, yeah, I think today, this is what I'm going to have to do. So for context, right, I've been going down to the London office occasionally recently, and we've got these big curved monitors. And something that I suffer from big time is like information overload and getting too distracted. So I have a 4-screen setup. I mean, I don't anymore. It's actually over there. And in fact, let me get it. I'll show you guys what my old setup was. It's pretty heavy. Christ. So this was my old setup. These big 4 screens. And so one of the things that I've found over time is, because I've had them for 5 years, it kind of crept up on me and I didn't realize, is I just fall victim to like information overload, and I'll be live streaming or on a call or doing a piece of work, and my eyes will be flicking to the different screens, you know, because I always had my trades open on the one screen, trading view open on another screen, I have the Discord open on one screen, and then a working screen as well. These days, because my execution is automated, I don't need to be watching TradingView all day. I also don't need MetaTrader open all day. And so I still find myself getting affected by those same habits of flicking my eyes, even to the Discord. God, I'm out of breath. That doesn't even look, it doesn't look heavy, but the stand, because the weight is like a claw, the stand is so heavy to kind of even that weight out. But yeah, I just find myself getting too distracted and I can't hyper focus on a task, which is kind of where I need, like what I need to do these days. So I made the decision to try out going back to one screen. So I bought one of these screens home from the Darwinex London office. And yeah, we're testing out. But what I'm thinking of doing is I've got a spare one of these. I think I've got two more screens in the garage. I'm a true trader, right? I've got like 7 monitors at home. I'm gonna flip one vertical and I'm gonna have it on to the right of the screen that I have currently. That way, at least I can have messages open if I need to. I can have a second screen if I'm copy and pasting something. And more so now, I completely forgot about streaming, is I'll be able to stream, but run StreamYard on the second screen so I can still see the chat and you guys just see my main screen. So I'm going to get that set up for next week for sure. So I apologize for, I wouldn't even say it's the technical difficulties. It's me, me being stupid. Yeah, let me pull this back up. So yeah, of course, I can take a look at your Darwin. Absolutely. That should be a little bit bigger now as well. I should look a little bit better. Yeah, Brian, absolutely. Just send me through your Darwin and we'll take a look at it. I've been thinking it's not worth my time, but still contemplating whether I should keep going because currently I feel like my performance is peak already. When you say it's peak, do you mean it has peaked or? Darwinex 0 BUYC. Okay. So I'm guessing you're feeling like you're just not going fast enough, I'm presuming is how you're feeling right now, right? Also ignore these horrible lines in the background because I don't know what causes them. I can't get rid of them, unfortunately. I'm presuming that you're a manual trader. I mean, 383 trades, maybe average of what, 2 a day? Yeah, 2.16 per day. Okay, that's interesting. You're okay. Yeah, I'll wait until you've told me whether you're a manual or automated trader first before I make any assumptions. Yeah, I have a couple of assumptions already, but I'd like to hear yeah, whether you're an automated trader using EA. Okay, is per chance the EA a grid or martingale bot? Purely because to me the drawdowns are quick and equally they recover quick. You have a highly negative duration ratio, so your average winning trade. Okay, so we're at the root of the problem, right? So grids and martingales work until they don't work. Naturally, they don't work too well on Darwinex because we have the risk engine and they kind of fight against each other, right? So effectively what is happening is as you're going into more drawdown, as your risk is increasing, you're actually adding more risk. So instead of kind of closing a trade and walking away and moving on, you're adding more size. So you're increasing your risk, right? Whereas the risk engine is doing the complete opposite. It's going, well, my deleverage on this position has exceeded this threshold. My value at risk is now increasing. And so what I'm going to do is I'm going to start reducing my exposure to that position. And so whilst you might be increasing the exposure on your end, the risk engine is actually decreasing the exposure. And therefore there's kind of the loss of synchronicity between the two accounts. So whilst your Signal account might fully recover a drawdown, your Darwin might not. So I would say we do have some very few guys who use grid and martingale bots and they've got a good record or a decent record, but 99% end up you know, doing their ass, as the saying goes. So I would be very cautious about running it and trying to scale it too much, purely because you're constantly going to have this black cloud over your head where you feel like things could go south at any second. The only good thing is that the risk engine will protect you if your bot, blows up one day. David Gomez, can you please analyze EUXL? Thanks. EUXL, isn't that EUXL? Aren't you? Maybe you're not. Are you Parabellum from the Discord? Parabellum, that's the one. I'm sure you are, but I'm not 100% sure. Johnny Loxwood watched Blaine yesterday and he showed on FX Dreamer 13 management styles and said he would put it on Discord. Where would I find this on Discord? What I will do is I will send Blaine a screenshot of that message now and I will ask him. Yes, I'm Parabellum. Yeah, cool. Yeah, we'll take a look at your Darwin in a moment. Johnny, I've just messaged Blaine, so I'll wait for him to come back to me. Brian, so does my system currently worth it for me to pay each month or no? Okay, so I'm gonna be controversial here. I would say no. Controversial being that I'm basically telling you to stop paying money to Darwinex, because I think you owe it to yourself to trade in the best way that you possibly can. So I would say if you're using a grid or martingale bot, think about protecting yourself, because grid and martingale will always work until it doesn't work, right? So there's always going to come a day where it just blows up. And I think I've used this example before of Waka Waka, my FX book. Waka 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 Waka. So Waka Waka had a 5-year track record. It was a martingale bot trading Aussie CAD, New Zealand CAD, and Aussie New Zealand, and it worked for 5 years. And then after 5 years, it had this drawdown, which it says 66%. I remember it being higher. I believe it was over 70, 75%. But a lot of people were running this at higher risk anyway, so just got absolutely steamrolled and wiped out, lost their whole account. And it took 5 years for that to happen. But the point is, generally, it will always happen. It's like, you see martingale commonly in gambling as well. People will do it on roulette tables. They will, keep betting black and doubling their size. But you forget how quickly that compounding effect of adding more size or doubling your risk, how quickly that kind of snowballs. So I would say trading a martingale is never worthwhile. Personally, I would spend some time trying to develop something that has a positive expected value over the long term. Risha, hello, I just completed calibration phase. Please can you give any suggestions? Ticker name UNBK. Unfortunately, I usually say you need at least 6 months worth of data to get a sufficient review. Completing the calibration phase, it's such a small sample size that I don't want to give you bad information, because there's things in there that will just be a coincidence or it'll be like inaccurate data just purely because of the small sample size. But what I will say is come back in a couple of months' time. And if you've got a load of trading data, of course, we can review it then. Firechrist said, from all the Darwins you've looked at, is there a sweet spot for time duration in holding trades? Great question. I think, that depends on, it's completely random, right? There's no kind of sweet spot that one thing suits all. I've seen so many profitable traders and they all do completely different things. I would say that completely depends on the assets that you're trading. But also like sample size again, right? Is these sorts of things at face value, you go, oh, okay, well that must be factual, right? In terms of, oh, this trader holds their positions for X amount of time, they're really profitable, that must mean it's good. But if you look at the past year, for example, as a sample size, and then you go, well, this trader's been holding for a month at a time or a week at a time, and he's smashed it, super, super profitable, looks great at face value. But then you look at his assets and you see he's been trading gold long. You're like, well, okay, so what happens when gold isn't going up every week? It's kind of such a condensed sample size, if that makes sense. So I would be looking at the assets that they trade and different information about what they do. Like I'd look at their max excursions, I'd look at their trade frequency and stuff like that. But in terms of a sweet spot, no. I would say what I do see, or a pattern that I do see, is a higher success rate with people who hold trades longer. And that's not me saying that holding trades for longer is a better thing or a good thing to do, but I'm saying more people struggle scalping and trying to trade intraday than people do, you know, buying a stock and waiting for a couple of weeks for it to go up. If that makes sense. Rob waka waka, bit of Shakir in the house. Brian, should I create new or use this for a new strategy? In terms of if you want to build a new strategy, I'm guessing. So here's what I think. I think keep your record for two reasons. A, you're up 11%. Doesn't make sense to put that to waste. And B, you've got 60K in AUM at the moment. Again, doesn't make sense to waste that. So what I would try and do is, if you come to YouTube, I will put some time into building your own systems, and you can do that relatively cheap, relatively easily. I'm not saying it's easy. I'm just saying it's not too difficult to put together. And I would start watching our Tuesday sessions, which are these strategy building and development sessions. You'll get some good ideas. You'll understand how I build systems and how Blaine builds systems. We're the two that run these sessions. Both Blaine and I are traders. This is my track record. This is Blaine's track record. And we show you how we build the systems that go into these portfolios. So I would potentially take some time, go through some of these sessions, have a real think about what your goal is from trading. Why are you here? Why are you trading? Because I can guarantee that there will be a discrepancy between your long-term goals and the reason that you're running a grid or martingale system. Personally, I think when you try and compare the two and you go, well, my goal is to, you know, start managing capital. Maybe it's not, who knows? If your goal isn't to manage capital, then I would say, you know, pack it up and you know, kind of like do something different, right? But if you actually want to build a career, manage capital, learn a lot about yourself, a lot about your strategies, be around people who are all doing this, right, and all doing the same sort of things, and trying to break out of the ceiling of what a quote unquote retail trader is and try and crack into that next level, the professional level. I think there's 3 layers. I think there's 4 layers, actually. I think there's newbie, retail trader, professional trader, institutional trader. They're not the same thing. I think if you want to break into that, you have to do, like, a grid or martingale EA isn't going to do that for you. And I think you owe it to yourself to spend a bit of time developing yourself as a trader. And whether that's trading manually and implementing your discretion on the market, or whether that's putting together systems like I do, which you can learn for free, literally on the Darwinex YouTube channel, I think it's worthwhile doing. But having said that, you have a record that is currently in profit and currently has AUM. I wouldn't start from zero personally, but that's just me. You might go, yeah, well, it's got 11% drawdown and that's higher than I would like. Okay, fair. But me personally, I'd be sticking with this because I'm up 11%. And also you've got, how many months is this? Like 8 months track record. Seems a shame to waste it, right? Yeah, that's my thoughts on it anyway. Take that and do what you will with it. Son of the King, welcome, dude. Hey man, just wanted to congratulate you on that 400K investment you got recently. Your AUM is getting really big. Yeah, I mean, I'll be honest. So I work as a strategy provider for a couple of boutique funds as well, external to Darwinex, and I hit the 1.5 mil AUM mark this week. So it's kind of like it's a bit surreal for me. If I show you, I always come back to this image. I show it a lot in these sessions because I think it's really important to think in this way. This is my favorite picture ever for traders. This encapsulates trading, and I guess business as well, but more so trading for the purpose of this conversation. This encapsulates trading so much, right? I've been trading for 7 years. I've been in the markets for 9 years because I was introduced to crypto before trading. I've had some success. I've had a lot of failures, but it's just been slow. And then, like I say, I took on my first investor in January through Darwinex, and then all of a sudden, it very much is like this. You know, I had 0 in Jan, and now I'm at 1.5 million. It's a very, very quick curve. And you kind of have to be, I think you kind of have to be mentally prepared for that, because it can blow your barnet if you're not thinking about these things. I've been thinking about this for years and years and years. So now I'm so unbothered by the numbers. Like, I really don't care. And it helps for me because I'm around a load of our traders who are managing decent amounts of capital anyway. So I'm seeing these guys kill it. And so it makes numbers more real for me, if that makes sense. But I appreciate the kind words anyway, son of a king. Brian, thank you so much, man. Love the stream, by the way. Appreciate you always, dude. Appreciate you always. And if you need anything in terms of, like, if you need a hand, or you want to have if you want to have a chat about algos, or you know, even just float some ideas my way, or kind of have a conversation further about what I've spoken about in terms of, like, your goals and your systems, and do they align? Are they fighting for the same things? Let me know. I'm always open for a chat. Rob, I'm getting out of drawdown too. Let's take a look. SPWL. I'm starting to get to know all your Darwins off by heart. It's just this one day, man. That one day, if that wasn't there, then this drawdown would just look, you wouldn't even notice it, right? Do not let this happen again in future. Do not let that happen again. I don't care how it happened. I don't care where it happened, why it happened. You can tell me it was your friend come in and pressed a button on your computer. Rob, I love you. Absolutely, I do. I don't believe you on that. I really don't. But, you know, it doesn't matter how it happened. Don't let that happen again. Because in a year's time, this is just going to look like a tiny blip, right? And you'll have so far surpassed it. If you stick to what you're doing for this period, right? If you do the same thing, like, so this is a massive thing that crushes traders, right? And I used to talk about this a lot with journaling, is traders will generally do the right thing when they're up and coming. They will start to get some success, and they will go, oh, okay, well, I don't need to journal my trades today, or I don't need to manage my risk because I've made it. You know, where was you at the peak? 36%. And Rob, I'm not saying this is you, so please don't take offense to this. But I used to see it with traders all the time who would, again, journal their trades day in, day out. What went wrong? What did they do well? How were their emotions, etc., etc., etc. All of this information. They would start winning. Maybe they pass a funded challenge. Maybe they flip a personal account. Who knows what the goal was? And they go, I've made it now. And they start getting complacent, and they stop doing the things that got them the success in the first place. And I think it's really important that you don't ever lose track of what got you to the successful position in the first place. So I need you to put your head back in December, Rob, November, Rob, October, Rob, just 2025, Rob, in general, because you killed it last year. Like, you did so up until December, and it was that one day. So, like, I think that the December return, the loss that's shown here for December, I don't think is 100% fair, because I think it's just that single day. And again, whatever the reason was for it, you know, I don't think it's like, it's not fair that this is on your 2025 record, in my opinion. But you need to put yourself in this Rob's shoes. What was I doing day in, day out? Was there a specific routine or process or whatever it may have been? Was there something that you were doing day in, day out that you're not doing now? If the answer to that is yes, you know what you need to do. If the answer to that is no, you kind of have to go, well, I actually don't think you've done anything wrong. I don't think your performance is lacking. I just think it was that one bad day. That one bad day, that one bad trade, that one bad friend that come into your house and press a button, like you said. That's what makes your record feel, you know, down in the dumps. Because if that wasn't there, you'd probably still be up here somewhere. It wouldn't be that bad at all. Anyway, sorry for the tough love, Rob. You know I've got your back always. Parabellum, let's take a look. Impressive record, dude. The only thing that concerns me, right? And feel free to correct me, but like your drawdowns are very sharp, which is generally the sign of a martingale or a grid trader. Let's take a look at yeah. So I have three things, right? I have three checks to kind of get an idea whether somebody grid or martingales. And this isn't foolproof. So even if you tick all three boxes, that sometimes is just the way that people trade. And I'm not saying that you are a grid or martingale, but your drawdowns and recoveries are very, very sharp every time, every single time. It's like big drawdown, big recovery. You'll be able to see it on your drawdown analysis too. Big drawdown, big recovery, big drawdown, big recovery. And then I take a look at the, I actually have four checks, sorry. The average trade duration. So your losing trades are 6 or 7 times as long as your average winning trades, which again is a classic sign of a martingale trader, purely because your wins are generally small and your losses, you will wait for the market to turn around. Your payoff ratio is also really small. So your average losing trade is 0.4%, whereas your average winning trade is 0.06%, and you have a 90% win rate. Again, signs of a grid or martingale. Then I take a look at the max excursions. And you do have, again, signs of a grid or martingale with these huge spikes to the downside. However, what's interesting is martingales don't usually have the big upside excursions as well, which is quite interesting. Usually it's like this, where the wins will all be tiny, whereas the losses, or at least the equity drawdowns, will all be massive. So that's my first concern. If you tell me that you're, I mean, how long's your record? A year and a half, 3,000 trades almost in a year and a half. So that's 7 trades a day. I'm presuming that you're trading algorithmically, clipping the market 7 times a day for a year and a half. I don't know, possible, but I would say it's more of an EA. Again, I guess my warning that I gave earlier. 2 seconds. Hey, up here now. Up here. Up here. Come on. You're disturbing the stream. Come sit down. That's it. Come be my mascot. Yeah, and again, I apologize if I'm speaking out of turn here, and you know, you're not a grid trader or martingale trader. I'm just going from sort of the data that I can see. Maybe you are a manual trader and you just take multiple entries. I don't know. I would just say be careful, because again, it only takes one time to completely change the trajectory of your equity curve. As of right now, fantastic, looks phenomenal. I mean, you're at all-time highs basically, right? Yesterday, all-time highs 146.79. Fantastic year last year, 25%. Great start to this year, 3%, 2%, like fantastic. I just hope you have some risk management templates in place if things go bad. What are you trading? Indices. Okay, so that's interesting. I would say index futures are a weird asset to martingale on. It's manual. Okay, so that makes more sense. I don't know. Maybe you don't martingale. Do you work an area? So like, do you, let's say, oh, you're not going to be able to see that. Do you like work an area and keep entering whilst price moves against you per se? But then, I don't know, what was your average hold time? You still hold for a long period of time. Not martingale, not in my mind. Okay, so you don't increase size as the market moves against you, but you do increase your risk. It's more like a turtle strategy. I don't know what turtle strategy is, to be honest with you. Yeah, your VAR is quite erratic as well. That's perhaps due to sizing, at least in this initial period, because your VAR went up to 80%, which is very, very high. But it looks like you've brought it back down a bit, so you're probably trading with lower size now. But the variance in grid trading can oftentimes cause like fluctuations in value at risk like that. Always one size. Okay, yeah. So it's more of a grid system than it is, I guess, martingale. An increase as well in the trade going in your direction. Okay, cool. So you're pyramiding into trades. Cool. I'm presuming using the same sort of strategy across all different assets. Although you basically are just an index trader. 12% or 13% of your trades come from commodities, which I'm presuming is either gold, silver, oil, platinum, something like that. Yeah, so you've got a super solid win rate. Again, it's expected because you have a super low risk to average risk to reward of like 0.15. So you need to maintain that high win rate, which is always a concern. I actually like high win rate systems. I'm not one of those people who's like, oh no, you have to have a positive risk to reward. I don't think you do. I quite like having a high win rate strategy. It's just generally when you have a strategy that has a 90% plus win rate, generally there's quite a bit of tail risk with it. Now, what I mean by that, I was going to get AI to produce something. I guess we can see it from your equity curve, really, is the tail risk is, whilst the wins are so consistent and yet small, the tail risk is that like the drawdown, like the downside is so much more exacerbated than the upside. So it'll be small win, massive loss, recovery, small win, massive loss, recovery. So there is quite a bit of tail risk to strategies like this. However, as of right now, you've got a year and a half worth of data proving me wrong on that. So more power to you, dude. I love your record. I have looked at it before as well. I would say it's probably the I discovered the Darwinex engine like 6 or 7 months ago. That's interesting since you've been trading with us since 2024. I would say that the reason that you does the VAR change throughout the trade because my percentage and P&L have changed a bit. What do you mean, Rob? You're asking me two different things there. VAR change throughout the trade. Yeah, VAR will change because your deleverage will fluctuate based on how long you're in the position. So therefore your VAR will change. Not sure what your percentage and P&L mean though. As in your like it won't retroactively or retrospectively, sorry, change what's already happened, but it will update in real time. Sid Blaine's replied. Johnny Lockswood, if you're still here, Blaine said he's uploading them to Discord now, dude. See, that's interesting. 142 profit factor. I would presume it would be higher, but 1.42 still solid. Let's bring you over to. I'm interested to see your capacity. Yeah, as I thought it would be. Your capacity is huge. 638 million is your capacity. That is the benefit of splitting your orders. Okay. So, in fact, I had a very, very, very humbling conversation this week. So, we have somebody who works with Darwinex on cap raising. highly recommend going and watching this interview. It's on the Odds On Open podcast. Why 20% of hedge funds fail after 1 year. Claudia Quintela on why managers need business sense. She's also got another one. I haven't watched this one yet. Well, I was talking to her about it yesterday, but this one absolutely is worth going and watching it. So, like I say, Claudia works with Darwinex. She's worked at UBS. Sorry, she doesn't work at Darwinex. She works with us on cap raising and introduction to allocators. Now, Claudia's worked at UBS and I think Morgan Stanley, and now she works for herself under a company called Vibe Advisors. And we're going to be doing some stuff with her. So I'm going to be doing an invite-only live session where you guys can come on and ask questions about raising capital, what it means to be a professional trader, what it means to be an institutional trader, and kind of everything that you can think of that comes with that sort of conversation. Now, she hit me with some home truths yesterday, which kind of because we were talking about capacity, and she asked what my capacity was, and I said roughly about 35 million, and she pulled a face, and I was like, okay, why are you pulling a face? And she basically said there's so much money to be made as a manager, right, as a trader, but at 35 million you won't be rich, basically. And I was like, whoa, I mean, 36 million is like a decent chunk now. And I sort of said, what's the minimum size manager that you'd kind of work with or start introducing? And she was like, you're like a baby. And she said, even 100 million would be like a baby. And to put it frank, it's not worth the paperwork for like, let's say JP Morgan or an investment bank. It's genuinely not worth the time or the paperwork for them to write a 25 million ticket. So if you went to pitch to JP Morgan, for example, or like say an investment bank or a hedge fund, and they say, okay, so how much is the ticket we're looking at? And you go, 25 million, they'll laugh you out. It's not worth it for them. They want 100 million, 150, 200, yada, yada, yada. So it's a bit of a wake-up call for me in terms of, okay, well, capacity is, and you guys know who've been coming to these sessions for the past couple of years, I banged on about capacity so much, and it's kind of really drilled it home for me that, oh, okay, capacity is something that I need to be considering because my capacity is about 30-something million. I think it's skewed to previous data, so I do think it's slightly higher. But absolutely, I need to be taking a leaf out of Parabellum's book here and trying to increase it, for sure. And I think potentially what helps you is you trade futures. And because you trade indices, I'm presuming that you're only trading during liquid hours. Whereas, of course, I'm trading CFDs. So you're basically at the market, you're at the mercy of the liquidity providers and how much available net they have at any given time. I trade some FX pairs, during rollover because I found a mean reversion edge that works during market rollover. The problem is with that is liquidity is far lower, spread is higher, therefore conditions aren't as good with CFDs. So there's so many different things that I need to work on and I need to bring to the future space. All this to say, right, Claudia is coming and doing some stuff with us, which I'm really excited about. She's fantastic. She's so knowledgeable, and she's just super smart person to be around. Like I say, I had the pleasure of sitting down with her for a couple of hours yesterday, one-to-one, and just floated ideas between the two of us, and such an inspiration. So I'm really glad that she's going to come and do some stuff with us, guys. But also it made me, and this is going back to the point I made earlier, is that you have newbies. So you have beginner traders in terms of, people who are brand new to the industry. Then you have retail traders, which is kind of the step above that. Okay, you understand all the basics, you know what to do, you know how to trade. You're at retail trader level. Then you have professional level, which is where you can still be a retail trader. You might even be an institutional trader. There's some overlap, but you become a professional, right? You treat this with the respect it kind of warrants and deserves. you act in a professional way, you do things the right way, perhaps you get some qualifications, perhaps you constantly study, you put time into it, you don't just hope, like wing it and hope things are going to turn out. And then you have the institutional trader, the guys who have the capacity, the guys who have the desire to trade big size, the guys who trade large amounts of cap for big firms. And there's a big difference. And she actually said something that was funny. We were talking about this kind of thing and the size of traders and stuff. And I said, somebody who, I basically said, so what level of AUM does somebody become a professional trader? And she said it's so not to do with AUM. She said she's got some managers who trade with 100 million, but she wouldn't consider them professional traders. Whereas, you know, she's met traders like me who trade with 1.5 mil, but I would consider myself professional. I do things the right way. I'm very methodical with what I do. You know, and it's kind of more of a behavioral trait than it is, oh yeah, that guy's now professional because he's managing X amount of money. So yeah, interesting brain dump, or at least I hope it was interesting. It definitely was for me. It was very eye-opening. And yeah, I've been telling you guys for the longest amount of time. I mean, when we go 35 million, right? And I'm doing basic numbers here. I'm not considering high watermark. I'm not considering loads of different factors. We're just doing basic math. So let's say you do 20% on 35 million and you keep 15% of the performance fees. That's $1 million a year, right? You know, that's for most people, I would say that's life-changing money. If we divide that by 12, you're looking at 87.5K a month pre-tax. Of course, you're going to be giving up a hell of a lot of money to the tax man. But for the majority of people in this stream and for the majority of people in the world, $87,500 a month is life-changing, right? But she was talking about guys trading 5 times that size and you know, just absolutely like rinsing it up, you know, trading with scary size that is like, would make you quake in your boots. But yeah, interesting. Sorry, Parabellum, we got a little bit off track there. Okay, open strategy. The only thing that stands out to me here, I'm gonna have to wrap it up in a few minutes because my kids are coming home and then we are heading out because the kids are off school this week. If we take a look at your open strategy, this is where we measure how effective you are basically at opening a trade, like your trade entries. And I'm not surprised you have a really poor open strategy score, but that's just the way you trade, right? That's the way you open and work into a position. Whereas you have a pretty decent close strategy. Very similar to me, that is. I'm very like in the same boat because I trade a lot of breakouts. And it's just kind of par for the course. I wouldn't put too much emphasis on this or worry on this, but it's just something to be aware of. Is it worthwhile playing around with your entries, entering a little bit later, or does it completely screw up with your edge in terms of if you start delaying your entries because this tells you to, you miss the first trades, which make up for 90% of the return. Yeah, Rob, trading 100, what's that, 100,000 lots? Yeah. I met a guy before down in London and I introduced him to somebody who I know who works for an LP. It's actually one of the liquidity providers that Darwinex uses, so I know him quite well. And I introduced this trader that I know who works for a fund. And he said, if we trade through your liquidity provider, because they were looking to change the brokerage from where they was executing, he's like, can I clip 1,000 lots and know I'm getting filled? And I was like, 1,000 lots? Okay, bro. Like we're doing big boy size here. Like, and I think even the guy who works at the LP was a bit like 1,000 lots. I mean, there's going to be no problem with filling you, but it's a decent chunk of size to clip in one go, sort of thing. But yeah, we're playing a different game to these guys, right? And there's pros and cons to both of it. You know, if you want a good life, if you want trading to change your life, you can carry on doing what we're doing here, and you don't have to get to that level. You know, like I say, 87.5 grand a month is still going to change pretty much everybody's life, right? But doing that, you're probably not going to have to start amending the way that you enter the market. As in, I don't necessarily have to split orders, because the way I trade now can manage 36 million. If I need to increase my capacity, then yeah, I'm probably going to have to look at splitting up my orders and having a different style of execution. And that's kind of the playoff that you have when you start trading with that bigger size, is you can't just create an algorithm or start looking at a chart and just execute and get filled where you are and not have to worry about it. It just doesn't happen. You have to split your orders. You have to think about how you're getting in. You have to pre-plan it. And sometimes you have to, you know, wait for the right opportunity. Anyway, enough of that. I'm going to wrap the session up here, guys. I want to thank you all for getting involved. Thank you, Parabellum, and who was it initially? Brian, for sending in your Darwins. I hope you guys have taken some value from today's session. There's not too many people here, which is unfortunate. But Twitter, the integration for StreamYard and Twitter still isn't working, so it's not posting automatically, which is super, super frustrating. But it is what it is. You know, I don't come here for the viewers. I come here for you guys anyway. So we will be back on Monday, I believe, with Sanjay for Sanjay for a performance coaching session. I can't even get my words right today. It's so frustrating. For a performance coaching session, and then myself and Blaine will be back for a strategy development session on Tuesday. So next time I see you will be Tuesday. So I hope you all have a fantastic rest of your morning, afternoon, or evening, wherever you're watching this from in the world. Have a fantastic weekend, and I will catch you next week. Peace out, guys. Thank you all for joining.